full in-depth masterclass on structure, order flow, different types of structure, etc., and how to actually put them into practice in an actual strategy to take trades like this. So do stick around to the end of the video, because you will know by the end of this video how to trade this strategy exactly. Guys, if you are new to the channel or you haven't already subscribed, go ahead and subscribe to the channel to stay up to date when we do post, and to just give us that bit of extra motivation to keep wanting to fulfill your guys' expectations. Okay guys, so first and foremost, for this specific scenario, we're starting on the daily time frame. Now, dependent upon your strategy, dependent upon, what time frames you execute, etc., usually we use 3 different time frames. And the way it works usually is we have order flow. In fact, you know what? I'll give you a bearish example. Usually we have order flow. Order flow is known as our external swing points. Outside swing number 1, swing number 2. So this is our starting high and our starting low. Price comes and works its way back up to put in a lower high. This high right here is lower than this one. Now, in this process, we also have our second variation of structure, which is the internal structure. And this internal structure is what makes up our trend. So you can see now this break of structure right here is an internal break of structure, because the trend, it has switched from bearish lower lows to bullish higher highs. Why? Because the order flow is just pulling back. So for the order flow to go and put in a lower high, you are going to see a shift on the lower time frames, the internal structure, that is going to shift bullish. Do not be fooled. This is what catches a lot of people off guard. They start trying to long the market, thinking that, the market's going to go up and go and take this high, etc. But if we're already in bearish order flow, which, essentially we are, if we're already in bearish order flow, then at some point, all we are kind of waiting for is a realignment. When we see that the higher high on the internal get broken, now the internal shifts bearish. So when the internal shifts bearish, aligned with the external bearish, that is when you are ready to get into a trade. And of course, when that also happens, as the internal puts in the lower low, bear with me guys, as the internal puts in the lower low, you will see the trend within the trend, which is our third time frame, come bullish back to pull back, just like this one, right? It's just fractals, just on different time frames. And the internal of the internal will shift, and that's where you'll be able to get into your lower time frame trades and take off big profits down here and then more profits down here. So if you got some of that, I hope you did. But if you didn't, let's go and take a look at what that looks like on the charts. I like to always give a lined example first, so you get the concept before we put it into practice. So guys, just like I said before, let's take our institutional order flow, which is the direction of orders that the banks are taking price into. So we know that banks have an intention, and this intention is where they're going to take price. So because of that, we know where the market's going. It's very simple. This is a complex system made simple, because that's what it should be, simple. We have our first low and our first high. As you can see, all of this previous price action is bearish order flow, right? If I just pull price out here, you can see that price has been continuously bearish for a good amount of time. So we're in a bearish trend. I think we can all agree on that. Then we put in our new lower low. It's a lower low because this low right here is lower than this one. So that right there is a break of structure. Break of structure to the downside. And so what can we expect from the break of structure? We're going to expect a pullback. Right, I'm just going to label this BOS, break of structure. Then we're going to expect the, pullback. And that pullback, if we go to a lower time frame, if I just pull, you know, from this low to this high, because that's where it happened, if we go to a lower time frame, you'll see that more than likely price will have shifted bullish during that pullback, right? On a lower time frame, you'll notice that we have the break of structure. Now, that doesn't mean it's bullish. That simply means that the order flow is bearish. We're just pulling back. So again, if we just zoom out, you'll get the same picture just with more candles. And that's all it is really. It's the exact same picture, just more candles. So you can see that it pulls back. So this now becomes our lower high, because this high right here is lower than this high. So when we shift, when we have our change of character, which happens in here, when we actually have our change of character, that is when we know, well, on a lower time frame, the change of character would actually be in here. And then you could have actually, you know, those positions in here, but we'll not get into that. When the change of character occurs, that is essentially when we know that the new low is going to be taken out. This low gets taken out. Back to the daily time frame. Just wanted to give you guys a brief insight into what that would look like on, you know, a lower time frame. It's the exact same story, just perceived on a different time frame. So that's why the higher time frame takes, you know, precedent over all. So we have our new high. Now we can expect, of course, a lower low because price is bearish. So we make a lower low. Now, guys, what are we expecting? After the lower low is put in and we change direction on the lower time frames, which, you know, probably looks like this, break of structure here on the lower time frames as price starts to pull back up, all we are expecting is a pull up to somewhere. And we now know, guys, because of supply and demand zones and order blocks, we know that that somewhere is this supply zone right here. We know that it's a supply zone, it's the buy to sell, where the momentum came in that took a level of liquidity. And that is essentially our mechanism to understand whether it's a valid supply and demand zone. It's in the top 50% of the premium and discount. It's in the top 75%. So we know then that it's highly likely that from this zone, because this is where the banks have their sell orders, from this zone is where we are going to put in a new lower low. Okay, so with that information, what can we do? Well, when price gets into our zone, we can drop down time frames. We can drop into the 4-hour time frame. And so from the 4-hour time frame, what are we expecting? Well, as you can see, guys, just as I told you, this is the high that breaks and we have a break of structure. So now we have a new higher high. And if we just mark this up, you can see that we have, you know, a low, a lower high, lower low, lower high, lower low, higher high. So that's a break of structure. So now the 4-hour time frame looks bullish. It is in a bullish trend, but we just understand that it's just pulling back to continue. Pulling back to continue, and that is order flow. But we have to understand these cycles in between to induce levels of liquidity. So we have a higher high, higher low. What can we expect after the higher low? A new higher high, and then a new higher low, and then a new higher high, a new higher low, and a new higher high, until eventually at some point it changes. Because we are now in here, we know that this is where the banks have their positions. So this is where the selling volume is going to come in. All our job is to do is understand where the banks are taking the price and then finding a way to get involved. In this case, we can see we have our break of structure to the downside. So all of a sudden, just like in the example, we were bullish, 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 bullish. Now we're bearish. And so what do we have? We have outside external order flow. Let's pull up our path again. We have the external order flow, like so. And then we have the internal bullish, 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 bearish, right? So when it shifts bearish, well, what can we expect? We're gonna probably expect it to continue in its bearish nature. Lower high, lower low, lower high, lower low, lower high, before eventually we take out the swing low, continuing the bearish order flow to the downside. Break of structure to the downside. And that is exactly what it is time and time again. It doesn't change. It is pretty much universal. And that's exactly what we have here. But how do we know where to take the trade from or where to look at? Well, the first thing that I see if I was trading this, which I was last week, I would see that there is liquidity right here. And so none of this is important. So then it would have to be higher than this. And then I also see liquidity here. So it would have to be higher than this. And there only is one zone that is higher than all of those. And it is this one. And so again, that is going to be our zone, very much like the fractal external. This is now going to be our internal zone. Our internal zone to know that what? We are likely going to go and take out this low because it's all just fractals. This is the low that put in this high that's lower than this high. So this is a weak low. Very simple. So how do we actually get into the trade? Well, when price taps into this level, we're going to drop down into the 30-minute time frame. And on the 30-minute time frame, I'm actually going to bring price into a bar replay so you guys can see this play out for yourselves. So you can kind of train your eyes to see it for yourselves. So let's bring it back here. So guys, this gray box right here is where essentially where the banks have their orders. We just need to know where to get involved. So right here, this is called a change of character. It's essentially the last bit of demand, which is essentially buying pressure, right? That put in this high right here, came into the market. So when price breaks this, that simply means there is now more supply than there is demand, which basic, universal principles of supply and demand. If there's more supply than there is demand, then the price is going to decrease and vice versa. So we know now that we're on the right side of the market because there's more supply. We know that this is just all liquidity. All of this is just built up mitigations on the lower time frame, known as liquidity, which we know by now. We've trained our eyes to see it time and time again. We teach these concepts time and time again in our premium community. By the way, guys, just a quick interruption of this video. We have 50 spaces for free. Yes, entirely free. A limited of 50 spaces into our premium community where our live funded mentors go live pretty much every day, and there's video breakdowns of trades and all of this sort of stuff, and Q&As and live chats where you can ask our mentors questions. All of this is going on inside of a premium exclusive community. And right now we have opened up 50 free spaces that you can redeem in the description of this video. Now, if you go there and those 50 spaces are, expired because it's the first come, first serve, the next week we will have another 50 free spaces. But however, if you don't want to wait, of course, you can purchase your way in there and get yourself in there quicker. But just thought I'd let you guys know, 50 free spaces for the first 50 people who join. Anyway, let's get back in. We have the built up liquidity and we've had the change of character. This is our supply zone that caused the change of character. How do we know this? Again, if you've been through our content, you know now what supply and demand is. If you don't know what supply and demand is, you can find that in different videos or definitely in our course at least. So that is essentially where we're going to take our first trade. Now, our first take profit is going to be this low. Now, there is an exact reason for this, because if again we zoom out and we just look at structure, we can see what? High, low, higher high, lower low. Okay, so here's a we've shifted bearish. This high is protected, which means this low is weak because this low has failed to break this high, which means it's weak. So simply just on structure, that's going to be our first target. And then our second target is going to be the swing structure of the higher time frame, which is going to be all the way down here if it wants to load itself. Because yeah, it's simple, right? If we just zoom out, you guys can pretty much see that for yourself. So zooming back in, let's see actually how it plays out, and then stick around because there's actually another trade that actually revealed itself that I didn't personally get involved in, but there was another trade. So you can see, guys, we was tagged into the trade. Price started moving down, moving into profits. Now, essentially, once this low is when, you can move stops to break even. So it's a risk-free trade at this point. And essentially, how do you get back into another trade? If you just wait for a pullback, because again, it moves in cycles. So extension, pullback, extension, pullback, extension. So when there's a pullback and a realignment, there would have been an opportunity to get involved again back into the market, which again, I didn't get involved in. I think it's somewhere here, if I'm not mistaken. Or it's somewhere soon at least, where there's another trade, and I'll explain to you how you would have got into that trade. So if we just drop to the hourly time frame, make this quicker. And press play. Yeah, okay, so here it comes. So you can see that we haven't hit our first take profit yet. And now what's happened? We've pushed up. So what does it look like on this time frame or on the 15-minute time frame? Essentially, what it looks like is that we've shifted bullish. However, all we actually have to do is just wait for the realignment of supply and demand. So once this low goes, because this is the demand zone that puts in the high, that's a change of character. Once that goes, that's a realignment. So there's a trade opportunity. So once that breaks, which it does there would have been an opportunity. Again, where's the zone? Let's see if it looks clear on the 30. It does indeed. This is our zone from here. Stops just a little bit above. And then again, take profit number 1 I would use for this level because it's the weak low. Just structured, that's to be safe, right? So we can take profits, but then take profit number 2, it's gonna be down here. So that's 23 are there, 25 are there. That's a lot of trading profits with a very easy to understand system. And guys, this is just one of our systems. We have multiple different systems across different time frames, etc., that we teach completely in depth. So there would be a stop loss, which is of course totally normal. So we would go ahead and remove that and just wait for price to play out again. So price now does what? Puts in a new high. So after it puts in a new high, it goes and puts in a what? Change of character again. So there would be another trade opportunity where you could get in here. Or if you didn't like the size of that stop loss, because that's not a great risk to reward, I would never take that. I would wait again for the mitigation, which is there. Now guys, once this low breaks, then I would get back in if there's an opportunity. And there it is. So where would I be getting involved? Here. Stop just above there. Risk to reward, 1 to 4. Bring down the stop loss. It needs to be at least 1 to 5. 1 to 5 whilst, taking care of the whole zone. 15-minute time frame, what does it look like? Yeah, just covering the levels. So 1 to 5, 1 to 6, guaranteeing your profits. And then of course, all the way down here for a 1 to 23. That would be a trade that I would be getting involved in. Of course, I wasn't on the market, so I couldn't actively get involved. But you can see the accuracy to that wick, which is clear, buy to sell to collect the order. So if we just drop now to the 2-hour time frame, just to kind of speed this whole thing up, and we can show you exactly where we are in current live price action, because we haven't hit our full take profit yet. So now you can see, by the way, we've hit these take profits. So we're able to close our positions, at least partial profits. We're able to close partial profits at, one for 12R and another one for 6R. So that's a total of 18R closed, and then taken again, like I told you already, end profits off at this level down here. And this is actually, if I come out of bar replay right now, this is live price action right now. Yeah, you can see, look. So this is where we are right now. It's a weekend, so of course the markets aren't open, but they will be reopening Monday, which is tomorrow. And I would be expecting something like this, or even something like this, or just something straight down. But either way, I'm expecting these lows to go. That's essentially why we're continuing to hold our profits. So guys, that is a wrap for this video. I hope you guys really did enjoy this video. If you haven't already subscribed, then subscribe to the channel. It would mean a lot to us. And if you want to find more of our premium products, hit the description down below. You will find access to our mentorships and our courses and things of that nature.